So, you're interested in trading options but haven't placed your first trade yet. So, what's holding you back? Maybe you can't wrap your head around all the unfamiliar options parlance, aka terminology, or maybe you're worried about making a rookie mistake that might just blow up your account. It's no secret that the learning curve can be steep, but fear not, you can do this. In this episode, veteran options trader Sarah Potter shares her top tips for beginners, ones that can help you build your confidence to start trading and hit the ground running once you do so. You're watching Inside Investing. Hello, everyone, and welcome to another edition of Inside Investing, the show that helps you level up your financial knowledge and sharpen your investing skills. I'm your host, Hiran Amin. Joining us is Sarah Potter, Managing Director of Active Trading at TD Direct Investing. She's a successful entrepreneur who's been helping other DIY investors across North America for over a decade to learn how to trade. Sarah, welcome to the show. Great to have you here with us.
Hi, thanks for having me.
You come from an interesting background. You come from an education background. It's a very different world than the one that you find yourself in now. So how did you get your start with options trading?
Yeah, it's so funny. I think if anyone had told me when I was in university that I was going to end up trading, I would never have believed them. And if people know me from high school, you would know that I struggled in math. And so there was a lot of barriers that I think to get into this. But yeah, I was in education at the time and had decided that I really wanted to make a change. I no longer wanted to work this 9 to 5 and I wanted to figure something out. So I decided that I was going to jump into this journey of trading, and I knew nothing about it at the very beginning. And it was a lot of learning. And so what I did at the very beginning was I would get up early in the morning and I would trade futures before work, and slowly but surely learned the language, figured out some processes using some simulated trading to get started, and eventually found some strategies. And then from futures, I moved into options trading, which gave me a little bit more flexibility. And as I learned to trade and I got better at it, I decided I was going to help other people as well. And so I went on a journey and ended up actually opening a business that grew quite large, which was all about a community and helping other people just like you and everybody here learn how to trade. Did that for a while and then sold that business, and then was part of running a brokerage style business in the US. And now I'm so fortunate to be here and speaking with all of you, which I'm really excited about.
Yes, and we get to call you our very own Sarah, so we're pretty proud about that. Now, we're starting a conversation here today, but it's not necessarily going to end after today's show. That's because we're going to be seeing a lot more of you in the coming weeks. So could you spill the beans? Tell us what educational programs you have on tap for TD clients.
I'm so excited to be with TD and to partner with TD as we move ahead with some new content to help traders alike of all types. And so moving into June, I will be offering webinars on a more weekly basis throughout the month, where we're going to go through some very more specific areas of learning, specifically into charting. We'll talk more about options trading and strategies, talking about how to manage them. And then I also want to give an opportunity to do an Ask Me Anything. You guys get to control the webinar and the content that we'll discuss.
Absolutely. Looking forward to those. And now, before we get to our conversation, just a quick note to our viewers. We're dedicating all of June to educating you about options trading, whether you're just getting started or a seasoned trader looking to elevate your skills. So check out our full lineup of events at www.td.com/OEM. Sarah will be joining us, as she mentioned, for 3 interactive masterclasses throughout the month and an Ask Me Anything live question and answer session. And you'll be able to find all of those registration links right at that website. On that note, let's get talking options, Sarah. So let's set some table stakes first. Can you explain what an options contract is and how do they work at a high level for the uninitiated?
If you think about when you want to place a trade, everybody's familiar with the idea of like, I buy a stock. But with an option, what you're doing is kind of getting ahead of that. So what you're doing is getting into a contract. And in that contract, as an option, you can buy an option or you can sell an option. In order for that to transact, you can be on either side of that transaction. Now with options, we have calls and we have puts, and those represent different sides of the option. And then there are ways that you can put those two options together with selling and buying. But the key thing to remember is that options have an expiry date. So kind of think of them like a coupon a little bit. So if you get some grocery coupons, let's say, they will have an expiry, and you as a buyer of going out to purchase that food can decide if you want to apply that or not apply that. So it's kind of similar with options. You want to do something with your options, and eventually the option will expire. And depending on whether you bought or sold it, you will either have the right to get into some stocks, or you might get forced into doing something with your stocks. And remember that one option represents 100 shares. Now, with options, you can trade out of the money, at the money, and in the money. Those are important because those will represent, let's say if you're buying a call, how much that's going to cost. So if you're buying something, we call it in the money, that means that that option has intrinsic value to it and a little bit of premium, which basically means it's costing you a little bit more money. There's an anticipated move there that they think, well, the odds there are higher that that's going to go in that direction, so you're going to pay up a little bit more for it. Versus if we go the opposite spectrum, out of the money. So an out of the money call would be primarily just premium. So you'll notice that those don't cost as much money as something that's in the money. The probability of success is different there. So again, these are things you're going to weigh, but understanding that, it's not one for one. When you make a choice about how far in the money or out of the money you're going to represent how much money you're tying up to place that trade. That's going to mean how much of evidence have you collected to help you make that decision about which one you're doing, and then understanding what is the potential outcome of what happens in each one of those. Thinking about options and remembering that you can trade options actually before it even expires. So sometimes you might not have a plan to take an option into a stock. You might trade just the options within, you're always going to exit your trade before it expires. Or people can do an options trade with a plan of actually owning stock. So they would hold that option into expiry.
Okay, yeah. So that contract, if you think of it as a piece of paper, that's worth something, and it ebbs and flows just like a stock would in terms of its price. Okay, I get it. So the next question I have, we talked about the what and the how. Let's talk about the why. Why might an investor want to trade options in the first place?
One, remembering that because one option represents 100 shares, you can trade options in some big stocks, some more expensive stocks, and not take as much room in your account to be trading those, as long as you're not planning at expiry to roll those out into the 100 shares. So it really gives you a bit of flexibility to take advantage of some of the moves that are going on in stocks, but playing them in the option before the option expires. The other cool thing about options is you can trade where you think it's not going, or you can trade with an assumption that it doesn't matter where it goes because you're just trading premium. It gives you more flexibility, in my opinion, because you have more ways you can trade. You can choose the length of time you want. Maybe you want an option that expires in a week. Maybe you want an option that expires in 3 months. You have a little bit more variety to make the decisions to put together different trades for what you might want to do with your trading assumption.
We want to maybe demystify the myth of options being complex. So, in your experience, Sarah, what sort of knowledge and skills do you think an investor needs to get started with trading options?
I would love, and again, personal bias here, but I would love every trader to be familiar with charting and to be able to just put up a stock. Let's say, for an example, you put up one stock symbol on a chart and you look at it in multiple time frames. Some of those just very basic principles of looking at how price has behaved in the past can help you make a decision about where you assume price will go in the future. And or maybe you won't make a decision to place a trade in that actual trading instrument because you do look at these longer time frames and say, actually, it really hasn't been moving lately. So I'm going to go find a stock that is moving. Because remember, there's a lot of different choices out there. And it's not like you can only trade 5 stocks. There's tons. Now, looking at a long-term time frame is helpful, but I also think it's helpful to look at a shorter-term time frame when you're making decisions about actually getting into a trade or actually exiting a trade, or maybe it's not working at all. And so looking at something on more of a 5-minute chart or a 60-minute chart allows you to really see how price is moving today, how price is affected by, let's say, things that are going on in the news. One last tip about all of this is when you start putting, in my opinion, if you start putting price on charts, it also is removing some of that emotional desire to be like, I got to get in. It helps you form a habit of building a strategy. Why are you placing a trade when? What is the reason that I'm entering now? What is the reason why I'm exiting now? Lots of time people make a decision to get into a trade, but they never make a decision to exit a trade.
Yeah, and you know what? I'm gonna admit that I fell victim to that trap of thinking the sky's the limit and I'll just ride it out. And it keeps going up, and then of course, because I didn't have my exit, it always would turn around on me. So I can definitely attest to that. Let's talk about some of the key lessons that I've heard you mention. And one of the things is you talked about the importance for new traders to develop their own trading style and strategy. Why do you feel that way?
When you're trading, think about who you are or what you want in terms of your risk profile. What kind of style of trading do you prefer? Do you want to be somebody who's looking to trade that you're going to wait a long time? Maybe you're not going to place trades, but when you do place trades, you're really going to hold those and so that that profit builds up for a longer period of time. So you're looking for bigger winners, recognizing that you won't have as many choice like at bats, if you will. And then when you have a loser, you got to make sure that if you're running that loser down a little bit, it's not wiping out all that other profit. And that's one style of trading. Another style of trading is you place lots of little trades. So you're never really, the goal is not to make a lot. You're trying to make a little bit, but you're doing it on like often. But who are you as a person is also important. Like, I am not a fan of roller coasters. I don't like them. I don't even like a merry-go-round. Like, I don't like that stuff. So for me, my personal training, because I recognize who I am, is I like many at bats. I like lots of trades, that I like variety. I don't even like driving to the office the same way. I like to keep it different. And so because that's my personality and I know who I am, I want to trade the same way too.
So it's nice that you said that, because you do have to figure out a lot of it has to do with the personality. I don't mind the roller coasters from time to time, but only for a hot 2 minutes. I don't want to sit there for a good hour going through that ride. So there are certain times where it makes sense to go into it versus not. So Sarah, let's talk about strategies now, since we talked about a little bit about trading style. So what are some of the option strategies that you found suited your style as you were learning to trade options?
Yeah. So, I mean, when you first start trading options too, you also have to think about what level you've been assigned. So that means, you as a trader at the beginning of your options journey might not have access to all the spread strategies, like we call it multi-leg strategies at the very beginning. Your risk profile will match, what you can trade. So let's say we're starting at the very beginning and I just want to mimic what I would do in a stock, but do it in an option. So buy a call. And when I like to buy calls, I like to either buy them at the money or in the money. I don't mind paying a little bit of value in there, so going a little bit further in the money. I don't mind paying up for a bit of probability. Again, it's probably the roller coaster thing. I don't want to be out of the money and buying just premium because to me that's too much of a risk. I like to spend it a little bit more. But that means my offset is that I'm going to invest a little bit more in that trade by picking a strike that's in the money. An option either has value at the end or it doesn't, which will impact how you place your trade. And because an option will really significantly change the closer it gets to the option expiry, I just generally choose to buy an option 1 week extra of where I think it's going to go. So if I think it's going to take 2 weeks to move to the profit target I'm looking at, then I'll make sure that I do an option that's 3 weeks out, or I'll do a monthly to give myself a little bit of flexibility. But again, that goes back to time and lifestyle. And if I look at my calendar, let's say next week, and I'm like, man, there's a lot going on here, I'm not going to have any options trade expiring next week. So I also will look at my life and say, when do I
Right.
want to be dealing with these or not?
You have your inner circle of strategy friends that you're going to usually stick with. And time to time, you might chat with some of the other strategies, but usually you're going to stick with it. At least in my experience, that's what I find, and from what I'm hearing from you as well.
So when you're building up your watch list at the time, you're at the beginning, you're like, what stocks am I going to follow? Think about it like dating. So when you first go out on a date with somebody, generally like you've got lots to talk about or things are working great, but you don't really know them yet. And it usually takes a few dates in before you're like, oh yeah, okay, I really know what's going on here. And so I kind of always told people like date your stocks as well. Get to know them first before you go too heavy in the trades that you're placing. Because the way that that stock or that option behaves when it expires, you need to know. How that stock moves when there's a news event, you need to know. How that stock moves when price moves into some significant support levels, you need to know. And so you need some time, some dating of the stock before you really are kind of like all into it. So think about that. So be cautious as the beginning, be excited, be curious, but be cautious.
Absolutely. And just a quick note, reminder to our audience as well. Sarah will be sharing her approach to trading options in more depth in her masterclass series during Options Education Month. So make sure to check out the schedule in our calendar of events at www.td.com/OEM for more of those details. All right, Sarah, another important lesson that you've shared is focusing on process over profits when starting out with options trading. Now, it might be tempting for new traders to focus on being profitable as soon as possible, but you feel that that can actually work against their success. So, how so?
Well, I think that is a limiter because it puts people in a pressure cooker kind of situation when everyone is like, this is the money I need to make this month, and this is how I'm going to do it. And then if it doesn't work, you're like, wow, it doesn't work. So keeping things small at the beginning is important. Keeping things realistic, understanding that you're building a skill is really important. Life will get in the way of all of those things. And recognizing that trading can be fun. And sometimes we don't always put those words together, but it is fun when you get to a point where you feel like you know what you're doing. And in order to get to a feeling of you know what you're doing, trying it out in a small scenario is helpful, or in a simulated account is helpful. There's a tendency or desire for people to trade with a sim account, but have trade with like $1 million. If you're planning to trade with $10,000, then do a simulated environment with $10,000, because trading $10,000 versus trading $100,000 in your account is very different. When I first started trading, I traded with one contract. I traded with $10,000. And the goal for me at the end of the week when I was trading was wine. So my plan was on Fridays, I wanted to be able to have some wine. And if I had a good trading week, I was going to buy myself a nice bottle of wine. And if I had a horrible trading week, I was going to buy wine still, but just not as expensive of a bottle. And so having that tip of kind of thinking about it, like removing the pressure of profit at the beginning, is helpful. Another goal can also be like, I'm going to make this amount of profit. And when I make this much profit, I'm actually going to take the money out and I'm going to put it over in a savings account, or I'm going to put it in a different type of investment. And so that way I'm making sure that I'm almost like keeping that pool of money for my trading money. And as the profits come, then I'm actually moving into something else, just so that I don't ever blow up my account.
One thing I'm going to ask you now is, I've always considered to be myself as a cool, calm, and collected person. At least that's what I think of myself. But that was until I met the investment world. That sort of changed. I didn't feel like I was a very emotive person, but then emotions suddenly just kind of rushed in. So another tip that you mentioned is to keep your emotions in check when trading, especially with options. So do you have any suggestions that might help beginners to do that?
Yeah, the market will school you if you get too full of yourself, for sure. And that's something we all learn. I can say that I've learned that too. But what I do know is that when I stick to my plan, it generally works out for me. When I get emotional and make decisions because of I really want it to work, I'm like hoping it will work, those never work out well. You want to plan for your trading for like an entry, for your management, and for an exit, and making sure you're closing that trade out at a specific time is important. How many of you who have perhaps traded a little bit have a story where you're like, yeah, it's doing really well. I made this much more money, so I'm just going to keep holding it. And then you hold it for one day too long, and then it all is just gone. Versus if you set yourself a target and say, when the stock price moves up to this level, this is when I'm going to exit. And then follow through on that. That is a big one. That's really important.
Yeah. And actually, this speaks to the question I'm going to ask you now. It's going to segue right into it. So, one of the lessons that we've heard often from other veteran traders is the importance of this exact fact of creating a trading plan before placing a trade. That's important. And you're also a big proponent of this. You've discussed this obviously at length so far. So in terms of what a trading plan looks like, I know you mentioned you want to have your entry, exit, a reason, maybe a why you're getting into that trade. Is there anything else that you would include in your trading plan?
Well, I think you want to have a plan for, yeah, how many contracts you're going to do. What are you going to do if it works? What are you going to do if it doesn't work? How are you building the evidence to place those trades? And then what evidence are you using to exit those trades? A timeline is important. So one thing I always use is kind of this. I created like it's like a 3-column chart, and it can be super simple. And what you want to do is kind of create a checklist, and it's I do, I don't, I don't know. And so when you enter your trade and you're like, okay, I do. What are all the things that I have going for me? Like, why am I placing these trades? And write down all those pieces of evidence. And that's in your I do column. In your I don't column, write the things that don't have. So, for example, maybe you're looking at a stock and it's moving higher, but you look at the index, the broad market. So you would put in the I don't column that the index, the broader market is moving down. But in the I do column, you have something like, yes, it's moving higher. And then you have this I don't know column. And if you're still learning, you might have lots in I don't know because you're still learning. Or you have like, I'm just not really sure about how this is behaving. So you put it in I don't know. Go back to that 3-column chart as you're already in the trade and check them off and be like, okay, how many of these are still here? And if you go back the next day and all your I do's are now I don'ts, that might be an indicator that you want to do something about exiting that trade.
Yeah, so what I'm hearing is like you're creating this plan, but you're also tracking and reviewing it as well. Not only after you've done the trade, but you're after you've exited, you're going back to it. So it almost sounds like more a little bit like a trading log or a journal, if you want to call it that.
I hate using the word journal because I don't think anybody likes journaling, and maybe I'm
You say
wrong.
trading log? How
I
about
don't
trading
like
log?
journaling, but it's a good way to do it because what you have to do over time is you have to
Yeah.
recognize what's working for you and what isn't. And what are the things that are preventing you from having a trade that works? So is it that you're not following your trading steps? Are you choosing stocks that aren't trending? Are you not following through on the exit? Are you identifying a profit target that's too wide? In that log or that journal, that's where you're going to go back and look after trades closed out about what worked so that you know how to make improvements moving forward. And sometimes stopping for a moment and saying, yeah, like I learned this. I am moving forward on all these is important because you want to understand and be proud of yourself for building the skill. And if you never stop and look at it, you don't realize how far you've really come.
And that's something that I certainly take to heart, just being able to track and benchmark with what you've done in the past. Not only what hasn't worked, but what has also worked in your favor that you can sort of still build on. Now, let's talk about this. Some beginners might spend a lot of time, learning how to execute an option strategy. And but the thing that's the challenge, and I think even this, I found this for myself, was there was a hard time deciding which security to trade. So, Sarah, do you have a process for how do you come up with ideas on which security you'd like to trade for options?
Thinking about what your interests are helpful, and then build and make a decision about whether you want to place a trade in that. So it's not about just going because I noticed that all my eldest daughter's kids all wear Lululemon, so I should buy Lulu stock. But it might mean, you know what, I'm going to go take a look at what Lulu stock and how it's behaving on a chart. And then maybe I'm going to look at how it's behaved over the last 3 months. And I'm going to put it on what I call a short list. So I have a watch list, which is a really big list of stocks, and I have a short list that I kind of pull and take off. This short list is something that's changing all the time. So look around you in your life. What are the things that you're kind of aware of? And then use that in terms of the research you want to look to. Now, I only talk about technicals here, but there's also fundamentals, and digging into a little bit about what the company's doing can also be important to help inform your decision about what you're trading. Gathering more than one piece of information is important. So gathering it from different places. And if you're seeing the same things, let's say the assumption you think it's going to go higher because you really like what the company's been doing, the sales reports are great, the chart looks great, there's no one talking about it negatively in social media. So maybe you're like, yep, all those things lined up, so I'm going to place a trade. I've got it from more than one place is really helpful.
Yeah, so really gathering, as you spoke about, gathering that evidence first to really fit that hypothesis of, you thinking that it's going to have a strong upward move there. So that's a good place to start with. Now, let's talk about the options, strike prices, and expiration dates, because that can be the next hurdle that we have to tackle. Do you have some tips on reading an options chain and choosing the right price for a trader's particular style?
Yeah, so you can personalize your options chain for whatever you like, right? And there are some people who will trade options just from the options chain. There will some people who will trade options just from Greeks. There will some people who will trade options just from charts. So you can personalize that options chain to be whatever you like. I like to personalize the options chain with a little bit of Greek. So I like to have delta and theta on there. I like to see different strike prices, some weeklies and some monthlies. I like the time to see different expiry dates. I don't keep it too complicated though in terms of my options chain, because for me, I'm building evidence from multiple places. So the strike is what you're going to pick. Think of it like a level. Like this is the level that I'm going to choose to trade. That strike price, the bid or the ask, whether you're buying or selling, is going to be different. You'll notice those prices are always changing when the market's moving, because those are what people are willing to buy and sell at the time. And those will represent different things. We talked about that's going back to the very beginning about understanding premium and intrinsic value. So I've just thrown out a bunch of terms there. And if those are new terms for you, maybe grab a sticky note, do a little Google search, write those down on a pad, a piece of paper near you. It's okay to not have it all right there in your short-term memory, but you need to know what those are in order to place an options trade.
Yeah, and it almost sounds like when you talked about strikes, because that's one of the things we look at. How do you pick the strikes? It's like a dartboard, right? If you think about out of the money terms you mentioned already to us, out of the money, at the money, and in the money. Out of the money, I almost visualize as like trying to hit the bullseye. You could do it, but the odds are against you for doing it versus trying to hit the outside of the board where you have things like in the money and out of the money. Do you have a similar process, or how do you go about picking your strikes?
I might want to trade on a way where I'm just trying to have something more reliable, less flashy, um, that can reoccur more often. So just like you said, the dartboard, I can place a trade in options and pick a strike where I will win as long as I get on the board, versus trying an options where I will only win if I hit the bullseye. And the bullseye might be a bigger jackpot, might be like the lottery. It's a really big one, but the odds of success there are different. So what do you want to trade? What are you looking for when you're trading? And strikes are kind of the same way.
How about expiration dates? Do you have a best practice for going about choosing those?
Yeah. So when I'm buying something, for me, I don't want to ever be involved in a trade in the last week of expiry, because it'll change a lot. And that's something to observe. So if you're new to trading, follow a stock through, like follow an option through, and look at what happens to the option as you move into Friday of when it expires. You'll start to see patterns of behavior in how the options kind of decay. So as it decays into the expiry, because only a few options will have value by the time they expire. Most of them, just like a coupon, if you never use the coupon and it expires, you can't use it anymore. So that can happen with options. If you have an option at the end when it expires that has no value, so the price of the stock is not where it is, the strike you're talking about, then that means it's worthless. So recognizing how that behaves and moves is really important when you're first started trading. And then make your decision about, well, when you're placing trades, what do I want to do? Do I even want to be involved in that? I can exit options trades, never be involved in them when the last week that they expire. Everybody always talks about, well, you would get into an option because it would help you get into a stock. You can do that, but you can also just trade options alone.
It's almost like any product you have. It's like milk as you get closer to the expiration date. It's less fresh than where it was. It's not necessarily bad yet, but once you get past the expiration date, well, it's pretty much you don't want to consume that. In the case of options, you can't even use those. Now, some new traders might be very concerned about managing their trade ahead of expiration, but you caution against doing this. Why is that?
Focusing too much energy on an options trade that isn't working, because you only have so much energy or you only have so much time. Think about that. Like, do I really want to keep working on something that's not working? Or do I want to close that out, give myself a refresh, start again on something else, and focus my energy. Yes, you can roll. Yes, you can add legs and you can you can morph one options trade into another options trade. And granted, sometimes that's totally worth it, but you want to make sure you're understanding why you're doing it. And as long as, if you go back to that I do, I don't know column chart, you still have a lot of things on your I do column, then yeah, maybe you want to roll that trade. So you do have different choices to make as you move into an options expiry. But I hope what everyone is taking away today is that you just always want to have a reason that you've built up with evidence as to why you're taking an action in your trading.
Yeah. Okay. That simplifies it for us. Now I'm keen on getting hands-on with the platform and you having a show us. So can you show our viewers how easy it is to get started with paper trading in TD's active trader platform? So walk us through a basic options trade that might make sense for a beginner, and maybe also just show us a little bit about the options chain that you kind of look at there.
So what you can see here is my active trader platform. This is the simulated account. So you can see that it's practice up at the top. And what we're looking at is Pepsi, so PEP. So I've put the symbol in here. What we're looking at is a daily chart. What's interesting is if I look back in April about price, and this is off of the daily, over the daily since mid-April all the way up to the end of May, is you're seeing that the stock price is actually moving higher. Price has coming into support. So these are exponential moving averages you see on my charts. And I'm going to give you a teaser here that we're going to go into more of this detail in the technical analysis webinar that will be coming up in June. But what you can see is price has kind of got a little bit of support. So from this assumption, without getting into too much detail, because I don't want to scare anyone off, is I think taking a look at an option maybe around this 180 would be reasonable. So I'm going to pull up the options chain. So I clicked over here on trading. You can see I went into the options chain. I'm making sure that it's still Pepsi. And we're looking down here at the calls. And I can see that the 180 call has a delta of 55. So if I want to go a little bit further into the money, I can take a 175. Now this one is got an expiry here of June 14th. And if I go to buy the 175 call with a June 14th expiry, I can just put it in here. I can change my contract size to whatever I would like, and then I can place that trade. Ta-da! We did it.
There we go. Look at that.
It doesn't have to be
Okay.
scary.
No, that didn't seem so bad at all. All right, so thanks for that, Sarah. Really appreciate it. We are going to leave our conversation here. I know we have a lot to chat through, but you know what? As you mentioned, we got a few more sessions with you coming up in the next few weeks. So we'll make sure for everyone to tune in then. Thank you for sharing all of your wonderful tips with our new options traders. I'm sure you've given a lot of our viewers a springboard into their own trading journey. Any final thoughts you'd like to share with our viewers?
I want to share with everybody that trading can be for real and that can fit into your life. And I'm going to give you a sneak peek of something that who's always trading with me. I don't know if you can see my little trading buddy, but trading can go along with all the things you love and can fit into your family and your life. This is my little doggy, and he trades with me too. I encourage everybody to learn and find a strategy that works for them because it's pretty awesome to do it. And I hope to see you all in the future webinars.
Oh, there you go. Okay, so I need to get myself a winged dog, I guess, for trading to be in the right mindset. So I'll work on that. So again, thanks for joining us, and for those in our audience, make sure to check out our full lineup of educational content at www.td.com/OEM. We have instructional videos, interactive masterclasses, and of course, more live inside investing shows like this, in other words, webinars. So register now to continue your learning journey. Until then, we'll see you all next time.
Have more questions? Check out the links to the right and in the description below.